Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu. On today's show, we have the CEO of Ariane Phosphate, Brian Ostroff. How are you today, Brian?
I'm well. Thank you for having me today.
We are coming live from the 2019 Palisade Hard Asset Conference in Jekyll Island. How have you found the conference so far?
Yeah, it's been great. It's good turnout, sophisticated investors, guys who I think are see the slowdown that we've had in the sector and really do view it for what it is, which is an opportunity. And look, I encourage people to do their homework. I've always believed that you make your money in bad times and you collect it in good times. And so it's bad times. It's time to make the money.
Okay, let's talk about the phosphate market. You gave a great talk earlier today at the conference outlining the fundamentals. So can you give us a brief overview?
Sure. So as your listeners probably know, phosphate is one of the three macronutrients in fertilizer, potash and nitrogen being the other two. From my experience, certainly this is the first step in where investors go wrong. So because potash, nitrogen, phosphate are all used in fertilizer, investors seem to believe that these are pretty much the same thing, and they're not. They have their own supply-demand characteristics, and although pricing may, rhyme for all of it, they really do have different drivers. And so I would say to investors that are either in the space or looking, make sure you understand the difference. So, digging into that a little bit more with regards to phosphate. So most phosphate does wind up in fertilizer, about 85%, but there is a growing amount that is winding up in specialty applications, animal feed and food. Today at my presentation, I held up a can of Coca-Cola and explained to everyone out in the audience that that's phosphate. Any type of preservatives, most of them are phosphate based. And so that's an aspect of phosphate that's growing at a little bit faster pace than the fertilizer side of things. It's also important to understand when you look at these, most investors understand gold, and they know that if they dig the gold out of the ground in Argentina or Nevada or Quebec or Siberia or what have you, it's all the same. It all trades at the same price. And phosphate isn't that way. There are subtle differences in deposits. It can affect the grade or the metallurgy. But there is one big difference. So most of the world's phosphate comes from a sedimentary deposit. In these deposits, aside from the phosphate, you have a lot of other bad elements, namely radioactive elements, uranium, thorium, radon, and you have heavy metals, mercury and cadmium. And so, particularly since you're talking about a base element in your food chain, it's not great to have these things in there. And so the world does what it can to deal with them. In some cases, it's much harder to deal with. And even the European Union, for example, recognizing this earlier this year, put in legislation that will limit the amount of cadmium in the phosphate that comes in. Because ultimately, look, it does wind up in the food chain. So that's most of the world's phosphate. We do need phosphate, and so, look, we need to deal with it. We need the phosphate. You deal with these deleterious elements. Here's what's intriguing about phosphate, or intriguing to me, and I think to your listeners, and where the opportunity lies. Look, there's quite a bit of potash around, and nitrogen's easy. You can make nitrogen. But when you look at phosphate, North America runs a deficit. South America runs a deficit. Western Europe runs a deficit. Asia runs a deficit. The whole world's in deficit. And that deficit gets made up by the Middle East and North Africa. So Morocco today is by far the largest player in phosphate. Just to put that in context, they're about 4 times bigger in the phosphate market than Saudi Arabia is in the oil market. Number 2 used to be Tunisia, but Arab Spring took out about 80% of that production, and it hasn't come back. Syria used to be a producer. Egypt Algeria. Today, Jordan's the second largest producer. And so anyone who, would be rightly concerned about security of supply, that is definitely a concern. The other thing on the demand side is, unlike a lot of other commodities where it could be cyclical, demand for phosphate grows every single year. You need an additional roughly 4 to 5 million tons of production to come on stream every single year. That's a lot of phosphate. And again, it's not tied to the economy or anything like that. So the demand is good, it's solid, it's going to continue to grow. And I think that the tipping point, the wild card here, is China. So China up until now has pretty much been in equilibrium. They produce a lot, they obviously consume a lot, but industry analysts definitely see them moving into a deficit over the next couple of years. Now, as a guy who owns a phosphate deposit, I think that could be very exciting. India today is the world's largest importer. It's about 1.3, 1.4 billion people. You're about to have another country of 1.3, 1.4 billion people go into deficit. Just those two countries alone are close to 40% of the world's population, two powerful countries that are going to see that they can feed their people. And so what's going to happen to phosphate prices, from where I sit? So, look, demand continues to grow. We are going to need new supply. The last thing that I'll kind of touch on the phosphate macro is the business side. So 85% of the world's phosphate mines are owned by the guys who make the downstream product. In other words, they take that phosphate and they convert it in through to the fertilizer. And so the guys who are short that phosphate, who need it, it's a challenging situation because you have to buy it from a third party, you have to ship it, you transform it, and it's hard to make the money. At the same time, the guys who have that additional phosphate, they're expanding their own production, and it's difficult. It's difficult for the guys who don't have it. And where 85% is integrated today, I suspect that number goes to about 90%. And so we talked about how we're going to need more supply to come on stream, and there is more supply scheduled to come on stream. So, look, I think it's pretty compelling. I think the supply-demand is very compelling. There's no substitute for it.
Excellent. Okay, Brian, before the interview, we were talking about how investors can weather the storm in terms of low prices today.
So I don't let an opportunity go by without throwing this in. And at the end of the day, I know that phosphate is maybe not the most exciting thing. Gold sexy, oil sexy, but at the end of the day, I can't eat gold and I can't drink oil. And so phosphate is something that really matters. And I think that people have to focus on that. They might focus on it a little bit and then they go get distracted by whatever the hot commodity is. But in the end, they'll just kind of come back because we need that. And so if you look kind of at the recent history, phosphate prices kind of topped out around 2012, had 5 years of going down to about 2017, and people ignored. Most phosphate projects got canned, brownfield expansions didn't happen.
Many thanks for that, Brian. Okay, as we begin to wrap up, can you just share with us the valuation of your company going forward? I understand it's publicly traded and at present time it's very undervalued.
Yeah, so as you say, we are publicly traded. We trade on the TSXV and under the ticker symbol DAN. and as well we trade down the U.S. on the OTC market. So today we trade with roughly a $45 million Canadian market cap, which, to me is astounding. You're looking at a project that even at today's lower phosphate prices in its first year should earn well over $200 million a year in gross profit. And we are trading at 4% of our net present value. 4% of our net present value for what is today the world's largest, one of the world's purest, safe jurisdiction, permitted, shovel-ready. I've been doing this a long time, 30 years. It's not often that you would see something like this. And so, at this point I'm often asked, well, why is that? And so I would say that to a large degree, it's because we're an orphan. So as much as I can walk into fertilizer conferences and people will know who I am, I walk into conferences, for example, like this one, and people really don't know who I am. They're hearing this story for the first time. For 5 years, the sector has been bad, and no one has cared, and firms have fired their fertilizer analysts, and there's no awareness. And so on our presentation, I show a 5-year chart. And, unfortunately, like a lot of stock charts these days in our sector, it's high on the top left and it's low on the bottom right. And I overlay 5 or 6 of the most important events of our company. And the thing that's amazing, whether it was a collaboration agreement with the First Nations or a permit or indications of financing or offtakes or anything like that, each event was kind of at a lower and lower level. So as Ariane advanced, there were fewer and fewer and fewer people to see it. And so today, I think orphan is the right word. But look, at the end of the day, these discrepancies only last for so long. And it's not as sexy as gold, but it is pretty much a one-of-a-kind asset. And so as people look, as the fertilizer guys realize that maybe they've fallen a little behind the curve and they need to kind of do something, it's not like a Newmont or a Barrick that decide they want to bulk up in gold and there's 10 projects out there that they can look at. There's nothing else of this size and scope and jurisdiction. And so, again, to trade at 4% of net present value is not often seen. To see 4% net present value for a project that is fully permitted and shovel ready is absolutely amazing to me.
Excellent. Okay, well, thank you very much for your time today, Brian, and I hope you enjoy the rest of the conference.
Thank you, and thanks for making some time for me.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?